What's up, YouTube? I'm going to be going over longs I took during pre-market session. This is a paper trade, so you're going to see a little bit of tweaking out. But I bought inside of a 1 minute fair value gap that's sitting inside upper quadrant of a 15-minute fair value gap. My bias was bullish, and I wanted to see higher prices. So with that being said, what I'm looking for in a scenario like this, all I want to see is, are we going to respect the higher time frame bullish upper quadrant? Now, the reason I chose this 1 minute is because it's sitting inside of that upper quadrant area, which is a good place to take longs. If we're bullish, we shouldn't dig any deeper than consequent encroachment. Consequent encroachment, I don't really even want to see in the first place. So now you're going to see me mark out this volume imbalance. And the reason I marked out this volume imbalance slash fair value gap is because it's been respecting. So what I want to see, if I'm bullish, I want to see price rip right through it, just like a hot butter knife. I don't want to see price respect that. I want us to push right through and then inverse it and use it to go higher. So that reaction right there is exactly what I'm looking for. Now my target, well, my first partial where it says 6 sell limit, you're going to see me zoom out now on a higher time frame. Relative equal high is right there. That's exactly what I'm looking for. I want to see that get ran through and tagged. And I'm taking another partial at a higher relative equal high or higher high. So what I want to see now is, are we going to use that volume imbalance as inverse, or are we going to just keep ripping through, which is an even better scenario? But look at how the bodies respect that 1 minute fair value gap. Look how the body respects that, and we just continue staying upper quadrant. We barely even close inside of the fair value gap, and every time we pull back, it gets weaker and weaker. Now my stop loss is sitting below that order block, right? Sitting below that order block right there. That's where price shouldn't go beyond. That's the last trade defense. Now we have a little bit of a weird angle here because I'm working on a different screen at the time. So what I want to see, as I titled right there, is I'm looking at speed above here. Now, if I'm looking for that high to get taken out, do I want to see price just take that high and then just flop lower? Of course not. I want to see us run through that high. I don't want to see a liquidity sweep. I want to see a break of structure. So now I'm marking out this fair value gap, and I'm going to mark it and call it a market structure shift, because in my journal and in my studies, I've been noticing the fair value gaps that rip right through a high are so good and so prominent. And you can see that fair value gap actually runs through 2 highs, and we pull right back into that. And again, that's where that speed starts to deliver, and we're getting super close to the open. So at the open, I want to see us just expand. That's what I want to see. I don't want to see us slow down. I just want to see us take off. I want to see us expand straight to those highs. And my last partial or runner is going to be at a premium wick. So there we go. We tag the first TP. Now paper trading on TradingView has a little bit, it tweaks out a little bit, and it's having one of its tweaker moments. But I definitely should have been out 6 contracts there. So I moved my stop loss below that fair value gap I entered off of, because I want to give price a chance to work maybe upper quadrant one more time before the market opens, or as the market opens, and then we could push higher. So now we're a couple of seconds away from market open, and we're still expanding. I'm getting that speed that I wanted. And now we have 4, 3, 2, 1. Okay, we open, boom, take out that high just like that. That's exactly what I wanted. Now we do come short of that premium wick, which we do it later in the morning session. I actually took another long off of that, but I'm not going to post that one. And again, tweaking out, I should have been out 2 contracts there, break even. Now I don't really care what the market does after that. And I end up, losing $4 on my break even there because of slippage, but nothing too crazy. This is me trying to see why the hell I'm still in this trade, but great trade, and it should be stopping me out soon. The W day. I plan on going live in February, but I've been doing so good so far in January. But see you guys in the next one.